So we all know that auditors are tasked with ensuring that companies and managements present a true and fair picture. But today, auditors and audit companies themselves or committees themselves are under the scanner, with various regulatory agencies looking at some of them with cynicism. How can the credibility of the audit process and the audit practitioners be restored? So this session is looking at the function of audit, challenges and opportunities. Mr. Sharma was here. I presume that he's just stepped outside and will join us very soon. Mr. P.R. Ramesh is the former chairman of Deloitte Haskins & Sells. He was also a director of Deloitte & Touche Assessment, Assurance and Enterprise Risk Services India, and a member of Deloitte Global Board and Deloitte Asia Pacific Board. Currently, he sits on the boards of some reputed companies. He has over 40 years of experience serving clients in manufacturing, banking, and financial services, technology, media, telecommunications, energy and resources, and consumer business sectors throughout his professional career. He's been associated with various industry and regulatory bodies and has also been on various committees of RBI, SEBI, and IRDAI. Mr. Niranjan Kumar Gupta is the Chief Financial Officer of MotoCorp. He has a rich and diverse experience in finance leadership roles in Unilever and Vedanta Resources. In his career spanning more than 2 decades, he's worked with Unilever in various capacities, including as Global Finance Director of Household Care and Hair category. He's also served as the Procurement Head of Unilever South Asia, driving supply chain synergies and competitive sourcing. Prior to joining MotoCorp, he was the CFO for the aluminium and power vertical of Vedanta Group. He's a strong votary of change, management, and improved processes and systems. We also have with us Mr. M.K. Sharma, the non-executive chairman of United Spirits and the founder of M.K. Sharma & Associates. He has rich experience in the fields of mergers and acquisitions, corporate restructuring and law. He's been a member of the Corporate Law Committee of the Ministry of Corporate Affairs and the Naresh Chandra Committee on Corporate Governance. He's been involved with several industry associations and serves on a number of large boards. He's also a member of the Executive Board of the Indian School of Business. In 2007, Mr. Sharma retired from Hindustan Unilever Limited, where he was a member of the Board of Directors for 12 years, including 7 years as Vice Chairman. And Mr. Sharma has agreed to moderate this panel discussion. So it's over to you, Mr. Sharma.
Thank you. Good afternoon. The topic for today's discussion is about audit function and clearly what are the challenges and what can be done about it. So I'll begin with some opening remarks. Essentially, when I reflected on it, the group is too well aware of what the role of audit is, what audit function means. I just wanted to remind ourselves at the core of the audit function is to make sure that when you have a limited liability company concept, the providers of risk capital and other stakeholders have as clear a visibility on the state of affairs in terms of financials particularly of the company as the management has. It is on the basis of that visibility and clarity that they entrust the management to run the affairs. So it's basically a division between the owners of capital and other stakeholders vis-a-vis the management that the audit seeks to, and that was the primary purpose with which the audit was contemplated, whether it was Companies Act 1913, 1956, and even 2013. What has happened over a period of time is that the core function of the audit, which was to make sure that you have the correct financial statements, they match with the books of accounts, they reflect a true and fair view of the finances of the company, has been enlarged, enlarged, and enlarged, and you have many peripheral roles that have been assigned for the purpose of the audit. And some of them very well meaning, whether TDS has been made on time, deposited on time, ESI payments have been made, or EPF payments have been made for employees, and a whole host of what I would call routine. There are some material, meaty questions which are also there for the audit now, related party transactions and things of that sort. But at the end of it, what I call is that core over a period of last, say, 100 years has tended to become weak or less important. Peripherals seem to be getting more importance as a part of the audit function. And that's something, to my mind, is a very disturbing trend. We need to be mindful that at the core is really the requirement of total transparency and matching of the books of accounts of the company with what you present to the shareholders, particularly providers of risk capital. That, to my mind, is getting diluted today. We need to restore. And can we find a mechanism where these peripheral functions of audit, which are no doubt relevant and appropriate, I'm not saying why it should be done, can we have another mechanism which deals with them and serves the purpose and does not distract from the core function of the audit? That was the one thought that I wanted to share with the group, and I would say I would welcome comments and observations and do that. Second, what are the opportunities is the second facet of this session, and that has to do, to my mind, with last 3 years. The COVID period led to, I think people are saying it was not a black swan event. We'll continue to have such black swan events now more regularly. But it was treated as a black swan event. And then I think the business and industry, the auditors, all came together and found ways and means of conducting audits, presenting to the shareholders audited accounts and balance sheets of the companies. And that led to a lot of what I'll call innovation. Some in India may call it jugards, but at the end of it, I personally think that in the last 3 years, we have been extremely innovative in terms of doing what was being done physically is being done remotely. And thanks to, I think, the digital knowledge, IT knowledge that India has and the lead that India has, that has enabled that to happen a lot more effectively. My proposition is, there is a school of thought which says, no, this was fine as long as the physical verification, physical visits were not possible due to COVID. We must go back to the old methods of working because they are very robust. My proposition is that the right way forward, or should we not look at it as an opportunity and say, having achieved this, do we need to really spend so much of time, effort in the field? Can we fine-tune it? Can we refine it to make sure that we save on a lot of time and cost by continuing to do what we have done during the COVID period and make it more and more effective and more, so to say, stable and reliable. And that is something which will really bring enormous amount of efficiency to the audit process. The issue there again is in terms of how do you achieve this in terms of making it more efficient and progressive. My proposition would be, first, a formal recognition. A lot of these things were even done by the government as a part of what they call special dispensations. Circulars were issued saying this could be done, that could be done. I think they should become permanently enabled in a manner of speaking. If you wish to do it, and you can do it. The only criticism of this is, as all of us know, that during this phase, the number of frauds also increased. And people say don't get blindfolded and walk into this trap of everything being done remotely. There can be number of incremental frauds that could happen. I'm really saying that would be like not doing it because potential risk of frauds has gone up. Frauds were happening even earlier. So they have increased indeed quite significantly. Can we not look for ways and means of making sure that we prevent those frauds rather than discard this method which has been evolved so well because there is a potentiality of frauds? And can we really strengthen it to that extent? That's the proposition from an opportunity point of view. I don't think that's something which is being explored at this point in time, but I think we as professionals need to explore that quite a bit. And having said these two propositions, in terms of getting back to the core of audit and making more out of the digital audit processes, I see many other opportunities. We have as a panel discussed some of them. I would now like to pass on to Mr. Ramesh to talk about and present his perspective on the issue, and then Mr. Gupta, and we would then take questions and answers collectively. So, Mr.
Thank you, MK, and good afternoon, everybody. I'm truly delighted to see so many still in the hall for this topic, the audit function, challenges and opportunities. I'll be provocative in what I say in these 10 minutes. This is, of course, a topic which requires several hours. The audit function today is at the crossroads. It has an existential crisis. It has a crisis of relevance. And I'll tell you why also. The first is what was discussed in the last session, where Naushad Mirza talked of, public, etc. Auditors still believe that they owe a duty to those who have appointed them. And I'm reminded of the book by James Comey, the former FBI director, against whom Donald Trump wanted to take action. He wrote a book called A Higher Loyalty. There has been a big shift where auditors are expected to have a loyalty not just to the companies which appointed them, but to the society at large. That the profession has failed to realize, point number one. The second shift, which auditors keep battling about, is what they call expectation gap, whereas within that expectation gap, there is a performance gap. What they profess to deliver, they are not delivering. You touched upon frauds, and I'll come back to that. But really, the first core issue is the purpose of audit. Mark Twain is reported to have said that there are two important days in one's life. The day one is born, and second most important, the day one figures out why he is born. The profession always remembers the day it is born. But I believe the audit profession has not figured out why it was born, and continues to do as it is in the case of India since 1949, in the case of the rest of the world even much longer, and hoping that will continue in perpetuity, whereas the world has changed, the expectations have changed, the business models have changed, globalization has happened, a whole host of things. We need to address the issue of purpose. Very recently, a few years ago, UK addressed this issue. Sir Donald Brydon Committee clearly said audit has lost its way. It is still a noble function. It was a noble function. It can deliver value, but is not delivering value. And what MK talks of correcting the core, we clearly need to do. But first, let's ask the issue of purpose. Are auditors expected to find frauds? A South American president once remarked, he says, in my country, there are a lot of elephants hidden among mice. The auditors seem are not only not finding mice, they are missing the elephants amongst the mice. So real issue therefore is, the leads and the auditors say we are not responsible for frauds. Surely you are responsible for detecting elephants in the room? And that is exactly what the MCA secretary said some time ago. Now this battle is on as to whether they are responsible for fraud. But I have a bigger issue there. Are they capable of finding frauds? I believe that auditors are more likely, as much likely to find a fraud as you can get sunstroke in a blizzard. Second, the auditors' tools which they use are archaic. They are not designed to detect frauds. It's almost like trying to pick a lock with a spaghetti. And that's exactly what auditors are trying to do. So that's the issue of purpose. Then let's come to the challenges before I come to the core and the opportunities. The challenges, the biggest challenge today is technology. What an auditor does, technology is capable of doing. An auditor looks at data. He interprets data. Technology today can do that. Does an auditor decide how much provision should be made for doubtful debts based on looking at the debtor's face? No, he looks at data. Just in a bank, that's what you do. So data coupled with AI, coupled with use of technology and analytics can produce do all what an auditor is doing. Unfortunately, the auditors are not seeing the writing on the wall. I question, why can't Infosys or TCS do an audit? Because it's their systems, their tools. More likely, what exactly does an auditor does in addition to interpreting data? That is, first, technology is one challenge. Second is a challenge of exclusivity. Exclusivity is disappearing everywhere in the world. An auditor says, I am the only one licensed to verify. The question is, this was the same issue which you would ask a cashier who said, I was the only one licensed to dispense cash. When ATMs came in, his job disappeared. Today, what an auditor does, others can do with the aid of technology. And that I come to the third challenge, which is the emergence of paraprofessionals. Today, if I have to check my blood sugar, I prick myself, put it in the machine. Am I a qualified pathologist? No. I am a paraprofessional. So paraprofessionals with the aid of tools can do exactly what a qualified auditor can do, or most functions can go away. You may not require an auditor at all. And in many countries, they have done away with audits of small and medium companies because they say there is no value. Those set of companies are not material to the country at large. Why do we need an audit? Whereas auditors said, we want not only exclusivity, the biggest challenge is they want by right. It has to be in law. Your law must mandate more and more different types of audits. Imagine if the medical profession were to say, there should be a law where everybody has to undergo a cardiac test, or everybody has to undergo an MRI after a certain age, because the medical profession has to survive. That's exactly what the auditing profession is trying to do, saying for 300,000 professionals, you want a law to say mandate these services. And they are further representing to the government, saying, oh, if you want to eliminate frauds, once in 3 years, every company should undergo a forensic exam. It's almost like saying that each one of us, our houses should be raided once in 3 years just to prove that we have no black money. What rubbish is this? So this exclusivity, work by statute, then there is Uberization of audit, that's a different subject. There is commoditization of audit. There is competition from other service providers. We have 3 institutes, one a costing, one a company secretary, CA institute, all claim they are very good at everything. So the question is, why can't they get together? They will never get together. But all of them don't see the writing on the wall. So that's insofar as, and there are many other challenges which come. Globalization is a challenge where, so how do we address these challenges and how we address the core? There are 6 building blocks to address the core. I can't go into all of it in the interest of time. First is structural factors. The profession as it is structured and the constituencies it serves, there is a mismatch. You have 300,000 professionals, let's say in India, of which 175,000 are in practice, of which 90,000 are sole proprietors. And look at the entire constituency it serves. They are huge companies. There are very few large firms, which is wrong. There is concentration. So those are structural factors which need to be corrected if you want to address the core. The second is environmental factors, which will be whether it's internal audit, audit committees, laws, regulations, etc. Third most important is the execution issues, which is the core. The methodology is outdated. The methodology needs, auditor still does sampling, where today tools will enable you to run through the entire population and come out with outliers which you can test. Whereas an auditor says, I have tested 25 items out of maybe 10 million items, and I have found nothing wrong in the 25, therefore everything is hunky-dory. We need to build forensic into an audit process. Otherwise, you will never discover fraud. We'll still be checking those samples. Auditors are barely scratching the surface when they're dealing with sophisticated banks where there are millions of transactions happening real-time online. Auditors, on the contrary, say, I want branch audit, I want to do this. They look at some paperwork. That's not audit. So the core has serious problems of methodology. Then you have output factors. One of it is the audit report. Auditors say, we have done an audit in accordance with auditing standards. And that's to the user. The user doesn't know what auditing standards are. Who wrote the standards? The auditors themselves. Who understands the standards? The auditors. In that is incorporated, they are not responsible for fraud. Auditor's report says, the management is responsible for the account, for everything. We are only responsible to carry out an audit in accordance with auditing standards. It's not even a speaking report. If one person spent 1 day doing audit, another person spends 1,000 days doing audit, both audit reports will look the same. Both will say that it shows a true and fair view. And part of this core, sir, is the approach. Auditors today walk in and verify numbers which are given to them and then say these are okay. They don't walk in with an expectation of what they should see. They only confirm what they are shown. Is an auditor prepared to walk in and say, I think the profit should be 1,000 crores, whereas you are actually giving me financial statements of 800 crores? No. He goes up and starts verifying the 800 crores. And let's say he compares last year's figure with this year. Last year figure is 100, this year 100. Oh, very good. No significant variation need not be investigated. The question is, should it be 100 or should it be 150? It's as it was in that Sherlock Holmes, if I recall, the dog that did not bark. That is what an auditor needs to address. What auditors have happened is, in the shift over the last few decades, because of oversight, an audit has moved away from a thinking audit to an inking audit. They first start with doing the paperwork because they are subject to oversight. Yeah, I'm almost through with the last 2 points. So finally, I think we need an speaking audit report, and there are other factors which are time. If you are given very less time to do an audit, you can't get quality, and of course fees. So I'll close with this. In terms of opportunities are enormous because of use of technology, but the opportunities are not the same as in the past in the way the audit was required to be done. Thank you very much. I'll address the rest through questions.
Niranjan.
Yeah, thanks. Thanks, MK, and thanks, Ramesh. I can see a lot of people here who either are currently auditors or would have been auditors or want to be auditors. So I just want to lift the spirits a bit up, Ramesh, after your conversation. So I think I'll start by saying that, and let me focus some more on internal audit. I'll start by saying that the internal audit function overall has served a great purpose in addressing the trinity, as we know, of risk, governance, and controls. And again, across the companies and at Hero, we have a very strong internal audit function headed by our chief internal auditor, Saurabh. And I'm not saying that because he's here. So now, let me try and put in a more positive perspective the internal audit on challenges and opportunities, and I come back to the core and periphery as well, MK. The way I see is that there are probably 4 to 5 things that we need to do in the internal audit function to take it to the next level in future. First is being pragmatic versus dogmatic. And dogmatic, as we know, is all about rules and principles that we have to follow. Of course, that has to be followed. But there needs to be a practicality built in when internal audit happens. The business models are changing. The SOPs against which an auditor audits, by the time it's even written, actually it becomes redundant in today's ever-changing business models. And by the time they audit, it ever so more redundant. So effectively, we need to be more practical when we are looking at internal audit from that perspective. The second I would say is past versus future. More often than not, it's historical based, which is that we audit the transactions of the last 12 months, the audit takes another 6 months, by the time it's 18 to 24 months gone. It has to be a future perspective. The assurance that my past was right actually is no guarantee for the future. Mr. Damodaran talked about it in terms of the ability or capability, the mutual fund disclaimer. Same goes for internal audit. And I take since I'm from auto industry, take an example. If somebody says that I assure you that last 2 years the brake has not failed. Now I don't think that gives more comfort that what's going to happen in the next 2 years. Maybe it's worn out enough that now it's going to fail. So I think compared to the rear view mirror, there's an importance of looking at future in terms of how the assurance systems will take care of the future framework, future control mechanism. So that's what I call past versus future focus. Third, I would say is visible versus invisible. Again, very often the audit function focuses on what are the symptoms. So there will be leakages, they'll say, okay, correct this, or we need to modify this, or SOP, or design, or transaction. 80% of the time, those are just the symptoms. We have to go underlying into what's invisible. If you look at, let me take an example. For instance, paracetamol versus immunity. So you can give paracetamol for fever, but what you need is immunity booster. Otherwise, you'll continue to have fevers. And I think as a function, internal audit needs to focus on visible versus invisible. And invisible can be, for instance, tone at the top. It could be resources, it could be training, it could be tech. And that's where the deep dive needs to happen. The fourth thing I would say is current risk versus emerging risk. The risks are changing dramatically. We look at cyber security, we look at social media. We saw one Twitter wiping out billions of dollars from a pharma firm. Brand reputation gets impacted. So a lot of these have big impact vis-a-vis some transaction somewhere where a document was not found or an SOP was not followed. So I think it's the emerging risk that we need to follow. And then I come to a couple of areas how it can be done as a function, which I would say, for instance, we look at expertise versus experience. So this I am coming to a couple of solutions in terms of how a function can gear itself up. Expertise is important in the function, which is the audit skills, the subject matter expertise, extremely important. You can't expect just to have learnt auditing standards and do the audit the way the tech is evolving. So you need to have the subject matter experts. Alongside, you need experience, wisdom, which can actually blend in the business acumen, the pragmatism. And I think it's that combination in an audit function, which is extremely important to have both. And the other thing I would say is focus on value add versus value protect. I think more often than not in the past, the function has focused on value protection. The expectation from management, from shareholders, from everyone is now moving to value addition. And I think the internal audit function is well placed to do that. They are the ones who see across many companies. They are the ones who are seeing all the transactions. They are the ones who are seeing the business processes. And therefore, the suggestions on value add through benchmarking, cost optimization are extremely important. So I think some of these things in terms of the way it can be done, all these challenges which I talked about, obviously once the challenges are solved, they can be converted into opportunities as well. So I do see actually a huge role that internal audit function can actually play. And coming back, MK, to also core and peripheral, I think that applies to every walk of life. I think as management also, we get swamped into a lot of peripheral things. I think it's a question of prioritization. It's a question of what adds the biggest value, the 80-20 Pareto principle. Saurabh, you keep speaking about that. And I think that's extremely important to apply across the board. Of course, regulators are not making the task easier by putting more and more and more and more, and we have to find a solution to that. But yeah, core and periphery is about prioritization of time and how we do it.
Easier in internal audit.
Easier internal audit. So I think that's my way of looking at the functions, challenges, and opportunities, and I honestly see more opportunities than challenges. And finally, if I have to say in terms of talent, as to how the function should gear up to address all of this, is about being more digital fit versus physical fit. I know we all focus on, and I'm not talking about physical fitness as in just health part of it. I'm talking about physical fitness means about having the number of resources, about having audit skills, about knowing your job. But I think given the way landscape is changing, the audit function needs to be digitally fit as well. And if one was to ask my opinion on that, I think we are way behind on digital fitness in terms of application of digital technology, in terms of, for instance, a question to everyone would be, why can't internal audit reports be generated automatically by a press of a button? Eventually in audit you are comparing something vis-a-vis what it should have been. So in a very simplistic way. And thereafter you get the time to apply the judgment. You get time to apply to the core. So therefore the peripheral, the audit report generation should happen digitally automated. We need to think about that, touchless audit reports. So I think digitally fit, digital acumen is going to be extremely important in the new world for internal audit to deliver what one would expect them to deliver moving forward in the next decade or so.
So we are all done. I will just add a bit to what Niranjan said. I personally think that internal audit also presents us with a unique opportunity to groom our future managers in terms of exposing them. Internal audit is one function which has an oversight across the length and breadth of a business, from manufacturing to HR to legal to sales to marketing, the whole lot. And really putting talented people at the time of their recruitment and making them exposed to the normal systems, processes that the organization has, enables them to really get familiar with the company as a whole much better. That's a time when also they have a drive to prove themselves, add value. So in fact, in the organization that I worked for, we always had a practice of young, bright management trainees had to do the internal audit stint at least for 3 years out of the 5 years of their career in the company. And we found that extremely value adding. So that's one bit of internal audit. Second, I think, supplementing Niranjan again on internal audit, I think internal audit again is shifting from transaction to processes.
Yes.
More and more internal audits are now being sought to do with, is the process right? If the process is right, the outcome would be right. But if individual transactions is something which was probably, I would say, an underdeveloped internal audit team would do. But a developed internal audit team would look at processes and see how can we add to the process, strengthen the process, improve the process to make it more effective. So focus has to shift on to processes rather than to the transactions. Talking about Ramesh's comments, I think I can't help but sympathize. I think the whole issue of the way the legislation has come about in terms of changes and expectations. In fact, I at times feel that people who draft legislations and make regulations have not looked at it from the point of view of who the customer is. If the idea is to protect public and the shareholders, they have looked at it was convenient to them. So if a given information is convenient, ask for it and make it a part of the audit requirement. Now that's not the way you should do this. And I think there is need for us to really get back to the basics and say, is it true and fair view? Is it something which matches with the books of accounts? And so on and so forth. And the last comment I wanted to make again was in the context of intangibles of a company. And I personally think that the present status, the way the intangibles are dealt in the books of accounts compared to the tangibles, we have very good record of what plant, equipment, machinery we have, what raw materials we have, and we monitor it. In case of large, highly market capitalized companies, they, even though may represent under 10% of the total market cap, 90% is really speaking what I'll call intangibles, be it trademarks, be it patents, be it formulas, be it business systems, be it business contacts, you call it by whatever name. I think there is a need to really reconfirm and verify and find a way of more appropriate representation of intangible assets in the books of the company, which is today not there. All that we get to hear in the audit report is that company has title deeds for intangible assets, which is basically trademarks and patents. But are they at fair value? The other thing that you do is whether there has been erosion in the value. Then, of course, there is a process that you undergo. But I think going forward, as the gap between physical assets and the intangibles widens, I think we need to find ways and means of getting a fair representation to intangibles in the books of accounts and as a part of the audit process. I think, Ramesh, you want to make any observations? Otherwise, you can throw the session open for our question and answer session.
No, very quickly, I just wanted to respond to your issue on intangibles. The problem is the accounting standard. Companies have very valuable intangibles like brand, trademarks, a customer list, in an airline, a route network, etc. You are not permitted under the standards to recognize self-generated intangible assets. However, if you do a merger or even if you sell any of those, the buyer is entitled to recognize it, or the merged entity is entitled to look for all the intangibles, revalue them and bring it into the books. So if people want to do something, they do it through these ways. So the challenge really between what you're saying as market capitalization and a book value gap is significantly intangibles, is because of the way accounting is today. The accounting rules are.
But should we not really challenge the accounting rules?
Oh, there are many more things in the accounting rules which we need to do.
No, I'm only saying that.
Yes, I agree. Yeah, for example, reserves in a mine, which is the most valuable asset, it is not in the books of a mine or in an oil company.
Can I just,
Sure.
MK, adding on this slightly different take. I do agree the point, but I think the way even tangible assets valuations sometimes in some companies get stretched, the moment you put intangibles, then one can imagine what will be the fate of the balance sheet and assets. The other thing, of course, on a lighter note, the difference between market cap and the real asset value. As we see in a lot of startups, it's not intangible, it's an illusion, as we have seen it. But I think that doesn't take away from the fact that there needs to be a proper recognition of intangible in one way or the other. Absolutely.
Questions?
Any comments, questions? Yeah.
Thank you. It was quite insightful. I come from the banking sector. We have a concurrent audit, we have an internal audit, and then we have the regulatory audit. Despite which we see that there are issues. So what is, I would like to sort of, and there are of course the risk-based internal audit process also has started off. and audit is seen as the third line of defense. So I just wanted your opinion, sir. Is there something better we can do? And sort of, otherwise what we feel is that we are completely over-regulated, and you're not pursuing your actual business of doing banking, but we are rather facing the auditors time and again. And actually, if you ask any banker, it's a period, full year is full of audits. It starts from March and ends in December. And it's either your internal audits or your head office audits, etc. So what, in your opinion, could be a better way to manage this?
I think, Ramesh, you should take this, but I'll just start by borrowing your quote of Mark Twain and just give a twist. 2 important days, one when you are born, other when you join the banking sector. Back to you, Ramesh, on that.
No, I think, yes, first is yes, there is an overdose of audit. Second, is that overdose generating some value or curing the underlying ailment? The answer is no. Third is the issue of who does it. Are they competent? Are they paid adequately? Do they have adequate time to be able to do it? Again, the answer is no in all of this. Because if you see the whole branch network, there is concurrent audit, there are auditors who have paid 5,000 rupees to do an audit. And they do the audit also. If you do that analysis, then as somebody said, if you throw peanuts, you know what you will get. Exactly. So there is a clear need today using technology. A lot of what those things do can be done by aid of technology. And that is unfortunately something which the profession needs to address.
I can speak from my experience as an Audit Com member of a bank, and I found it extremely onerous. At that point in time, and I'm going back 9-10 years ago, and we would spend, you wouldn't believe, 3 full days for every quarter's audit committee meeting. And we ultimately had to divide the work between compliance related issues and the finance and account related issues. The chair of the audit committee would one day, without a formal meeting, sit with the management, look at finance and accounts. I would on the other day sit with the internal audit team and the compliance team of the bank and understand the issues related to compliance and internal audit. And then we'll brief each other and then sit formally as an audit committee, which used to take 2 days. One day was virtually gone in what the regulator prescribed had to be presented to the audit committee every quarter. And we had to go through them and say, we have studied it, noted it. Now, it is a very, very clearly, the regulator feels if the audit committee is given the responsibility, it is nirvana from their point of view. And second, again, talking about when a mandate comes, look at this. In fact, there have been mandates from regulator based on what they observed in this one section of the banking sector to say this, others must also do it. Internal audit as a function is not allowed to be farmed out. We are tempted to do saying there is better expertise available X, Y, Z. You can call them in as advisors, but you can't call them internal auditors. Reserve Bank came in with a very heavy hand and said, notwithstanding an enormous amount of pleading by me personally, saying in the rest of the private sector, getting a fair division between the whole-time employees and external people for internal audit works very well. They were not impressed. Their view was that internal audit team has to be in a bank entirely its own staff. So there are challenges, but I think a lot can be done. And again, come back to what is the core that we need to define. We have today far too much peripheral in right up to customer complaints used to come to the audit committee. I don't know. So, Ramesh?
No, I just wanted to also respond. The reality today is if you have a private bank, private sector bank, single auditor, till the recent regulations, till recently regulations changed. The fee must have been, let's say, 10 or 15 crores, whatever. Half the size of that private bank, only statutory audit. A nationalized bank would pay a fee of 100 crores, anywhere between 100 and 150 crores, because they would have hundreds and thousands of auditors across branches. Does it mean the quality of the audit in the nationalized banks is 10 times more superior than a private bank? I leave it to you to decide for it. We are not in the business of employment generation for professionals. Out of 1.3 billion population, 300,000 people can't demand employment. We need to measure everything with value which is being delivered. And that is where we need to head in determining, do we need this function? What is the alternative? Is it producing value? If so, at what cost? That close look. Merely because there are professionals around, there are professional institutes, anybody and everybody starts a profession, cannot demand work.
Okay.
Yes, Suri.
Good evening. This is for Mr. Ramesh. So you had mentioned about what you call the relevance of audit having come down, and it's likely to go in the same direction. So according to you, who should be the best what you call the entity? I mean, is it the audit committee, or is it the CA Institute, or is it the government? Who should ensure that it comes back to its original relevance?
See, Sir Donald Brydon, who headed that committee in United Kingdom, and also Professor Karthik Ramanna made the same comment. They said the audit function is broken and needs to be mended. And the only people who can do it is the audit profession themselves. So the profession needs to deeply introspect. You can't live in 1949 as an Institute of Chartered Accountants of India. You need to introspect, why am I wanted? Am I wanted because of a statute, or am I wanted because I deliver value? Remove the statute, am I wanted? If I am not relevant, what is it I need to do to be relevant? And it can't, if it means partnering with other professions, so be it. If it means having technology personnel in your profession, so be it. You can't say, I am a chartered accountant, I am the only one exclusive, and that should continue in perpetuity. That cannot happen. We still have 15 minutes.
We still have some time.
I'm surprised nobody has asked on auditor independence, which is the pet topic normally to beat up auditors.
I think they got tired or overwhelmed with the independent director's independence.
Yeah, I think so.
So, I think just while, let's say, in terms of audit, Ramesh, you said that audit profession themselves, they need to introspect. I think somewhere there's a role of regulators as well. And what MK said earlier, given the plethora of regulations that the audit committee is being burdened with, and I take example of related party transactions, and from 1st April 23, the extension that's going to happen on the definition as well as subsidiaries, related parties, I'm just dreading as to how an audit committee is going to derive assurance and actually go through and verify and actually say that it's all there. I mean, that's just one example. So I think there needs to be not just introspection. I think there needs to be some bit of more or deeper engagement with the regulators. And actually, one thought I have is every regulation that comes out, we should we should ask or request the regulators that please say what is the objective and intent of this regulation. So it shouldn't start with the act and short title and commencement and coverage and XYZ, but it should actually give the entire preamble that this is the objective that is sought to be achieved. Just like in businesses you do, pros and cons and stuff like that, so that people understand that this is the spirit and this is the letter it's translated to, which then allows for deliberation later on moving one way or the other. So I think that's very important. Otherwise, it will go back to peripherals versus core argument.
But Niranjan, I think we as people from business are equally responsible for it.
Yeah.
Most regulations today provide for prior consultation, drafts being published,
Right.
comments being invited. Somehow or the other, I think everyone sits back and thinks that
Yeah.
somebody else would represent
Sure.
and provide a rational basis why a regulation should not be framed
Right.
the way it is proposed to be framed. The industry chambers, and I'm talking of the big ones, CII, FICCI, SOCHM, they assemble to consider it only when the final regulations are published. And I think
Yeah.
we need to introspect and say,
True.
are we taking some of the draft regulations seriously enough? And do we realize that that's the time when we need to respond and react rather than wait till those drafts become final regulations? So to some extent, we need to look inwards and say, have we failed ourselves?
Yeah.
So MK, since there are 12 minutes, may I just take a few minutes to make
Sure.
2 points. One is, let me respond to what Niranjan said. Regulations, it's not just about stating what the objectives are. More importantly, you need to be able to visualize what is the end state as a result of that regulation. And then measure yourself, that end state, with what has happened. And then if necessary, roll back the regulation if it is not so. Otherwise, every day we seem to be having regulations. The second point, which perhaps didn't come up, is the role of audit committees and the role of auditors. Now, there is so much expectation from audit committees, and in the financial services sector, it's even worse, because there is the distinction between governance and operations is so blurred that everything gets pushed up till the board, and board needs to look at it, and maybe the chairman of the audit committee for all matters. Having said that, how do you expect an audit committee to deliver on its responsibilities? You meet 6 times a year, maybe sit for 8 hours looking at presentations on all through, and then even the most brilliant chartered accountant looking at presentation, fleeting slides like this, can't find out. And because of this whole issue of UPSI, unpublished, price sensitive information, financials in some cases are given on the date of the meeting, saying, no, we can't do that. And then there are tons of pages of financials, which again the most brilliant chartered accountant cannot make out anything. Who is inside the company the longest? The auditor. Who has access to the books and the details of the transactions? The auditor. Who works through teams of tens and hundreds of people for several days? It is the auditor. But when you read the audit report, you will find that he claims this is the responsibility of the management. Our responsibility is only to carry out audit in accordance with auditing standards. And then with the accounts show a true and fair view. We need far more accountability of the auditors. I have been an auditor for 40 years. I have been advocating the same standards. Of course, I am guilty of the fact that I have also been maybe singing the same tune. But in reality, as we see all of it, and today we are talking of relevance, I think we need to ask ourselves, shouldn't we expect more from that function? Or should we expect more from the audit committee and independent directors?
I think...
Yes, Ms. Damodar.
Now, I want to start with where Ramesh ended, the audit committee. At one point of time, not so long ago, I was on 6 boards, and I was a member of all the 6 audit committees, and I chaired 3 of them. To think that the audit committee does its work is what, Mr. Sharma is here, he is a lawyer, I am not, but I will use lawyers speak. It's a rebuttable presumption that the audit committee does its job, right? You have to actually look at the evidence, and then you will see that that presumption is way, way off. Take, for example, related party transactions Niranjan talked about. I am on the board of a company, I am on its audit committee, where there are large number of related party transactions. I'm not saying they're wrong. Related party transactions are not necessarily wrong. My point is, does the audit committee have the time and the ability to ask two simple questions? Is this in the ordinary course of business? Is this an arm's length transaction? And I think we just go through it. In fact, in one company, the minutes said that the management represented that this was in the ordinary course of business and at arm's length. I said, at least write the minutes correctly. Don't say the management represented, at least say that you applied your mind to it. Nobody's going to hold a gun and ask you what you looked at because you didn't look at anything. Otherwise, you'll take 3 days for that. But my question is, Mr. Sharma mentioned the consultative process. And you said rightly, and I've stated this publicly, nobody responds when a paper is put out for discussion. It's only when it takes final shape you come back. But there's another element to this. Even those that respond, are their suggestions considered at all? I have in fact made a request and I want to share it in this forum. What did the draft paper say? What were the suggestions made? And what was it that you got in the final product? And what are the reasons why some of these suggestions got discarded? If that exercise is done, you will see how hollow the consultative process is. In other countries, they have 6 months for consultation. Here you have less than 1 month for giving your views. I think we are going through a game of pretense and we are sort of doing various things, bluffing each other, nothing more.
There are no more questions.
In fact, sorry.
He has a question.
So is there a question? Yeah, so let's take the question. But just one build up, Mr. Damodaran, on what you said. Exactly the same thing on the related party transaction. I don't know whether Dheeraj is here, but there are a lot of representation made, at least in that case, even before and during and after. And if the process, what you're suggesting, is followed for all these suggestions, actually that will be a very transparent way of actually understanding even the regulator's mind, and they can be more accountable as well in terms of the final impact, Ramesh, that you were talking about.
The point is, don't take all the papers.
Yeah.
Just take 1 or 2 and then see how.
Exactly. Very good. We take the question.
I'm Thomas Matthew. I have 2 simple questions. One is, as per the SEBI guidelines now, the credit rating agencies are to interact with the audit committees of the rated companies. What is the rationale and how effective it is, and what is your comment about whether it has come to stay? Secondly, there is no statutory restrictions on the chairman of the board also being the chairman of the audit committee. And I know in some of the companies, the chairman of the board also is the chairman of the audit committee. What's your comment on the relevance or the appropriateness of this? Thank you.
Just one fact before you respond. Out of the top 100 companies, 2 companies have common
Doesn't really deserve too much of a debate to say the 2 roles should be segregated in an ideal situation. Okay? And we should not really have the chairman of the company acting as the chairman of the audit committee. There is a system of what I'll call checks and balances that the 2 roles bring in, and that is completely lost if there is a common person playing both the roles. Having said that, I would say in rare exceptional situations where a size of the board is such, the size of independent directors is such that the other person that you have on the board has skill sets in a very different area and would probably not be able to do justice to the role of an audit committee. So I would say that in some exceptional situations, as a stopgap arrangement, I'm again saying stopgap arrangement, it is acceptable because it is permitted. But as a policy matter, as a perspective matter, I would say certainly most avoidable. I must confess, I have myself done that role for 6 months in United Spirits. After Mr. Malia's departure, I was the chairman of the audit committee, and when he resigned, I was also appointed the non-executive chairman. and we didn't have anyone in the board who could take over from me as the audit com chair. So we looked for a director, brought him in, and 6 months in he was there, and then I relinquished my role. But at that point in time, it was imperative that Mrs. Shani was extremely, she's an educationist. Now she found it very difficult to do the audit committee chair's role. We requested her. So it's at times could be more a compulsion, but as I said, more as a stopgap arrangement, it may be worked out, but not the right thing to do.
I was also asking about the SEBI's guideline. The credit rating agencies are mandated to interact with the audit committees and audit committee chairman of the rated companies. The rationale, effectiveness, and the relevance of it, whether it has come to stay or not.
Well, it has in any case been being done. The investigating agency haven't refrained from doing it when that was not there. They called up the audit com chairs, they interviewed them, they questioned them. It has happened to me many times. So it's not that it didn't happen otherwise. And they have very wide past. And I personally think that you have nothing to hide. Yes, it looks a little bothersome, but I must confess to their credit, they are duly courteous. They call you, they ask you questions, and you respond to them, and you come back. I personally think it's only fair. I don't think we should put constraints on the investigating agencies.
Sir, I didn't ask about the investigating agencies.
Rating
Rating agencies.
Oh, my apologies. I thought you talked about investigating agencies like CBI, Enforcement Directorate.
No.
Credit rating agencies, of course, is a matter of they are drawing comfort. They are rating you based on that. People are investing in your debt securities and otherwise. And if they want to interact and engage on, let's say, control processes, control mechanisms, I think again, CRISIL, CIBIL, they should certainly be able to engage with the audit com chair. I don't think there is anything improper even there. My apologies, I understood it as initially investigating agency.
Yeah.
How many audit committees? They have thrown up their hands.
Good. Close.
Yeah.
So, thank you very, very much. If there are no more questions.
Thank you.
Thank you very much, Mr. Sharma, Mr. Ramesh, and Mr. Gupta. May I request Mr. Radhakrishnan Nair, former member IRDAI and former executive director at SEBI, to please present the small tokens that we have. We've got caricatures of each of you, as well as a certificate stating that 10 trees have been planted in your name in the Sundarbans. Yes. Completely endorsed, sir.